benefits of property over stocks or starting.
Shears versus property. What makes more money?
3 reasons why property is a much better investment than stocks.
Or shares, and honestly, it's pretty simple.
So the punchline to these videos is leverage. Leverage is the reason why they believe that property is better than shares, stocks, or owning businesses. But in my view, it's completely ridiculous to compare an unleveraged asset like the stock market, which you can leverage into, compared to property. It's not comparing apples with apples, it's comparing apples with a Thermomix. Now, one thing that they never mentioned about leverage, and that is just called debt that's got to be repaid to a bank at some stage in the future. What's never mentioned that, well, yes, it can go up, but potentially if the market went nowhere for the next 5 or 10 years, or, heaven forbid, went down by a bit, doesn't need to go down by much, the deposit you've put in, let's say 10%, could be completely gone or even put people into negative equity. So they only talk about as though that valuations only ever go up. All of this equity and profit they talk about, they've built in their own portfolios. This is all what's happened in the past. There is no guarantee it's going to happen in the future. And as the valuations went up to provide them this equity increase or profit in their own portfolios, that means the people that are buying in now are taking on far more risk than ever before. And that's because it's been driven by debt, and there is a ceiling to how much these valuations of these properties can get to. And generally, based on my research, it's based on what the bank will lend people. I'm a huge advocate for businesses to build wealth over the long term, whether that's businesses via the stock exchange or your own private business. You need to understand the people that are bragging about the profits and equity they've made, or they're telling you how to buy your next property or your 5th one, that you need to understand that they are conflicted. They are in the business of selling properties or selling the loan, whatever. You need to understand that it will be a one-size-fits-all strategy. It is going to be all about investment properties and negative gearing, and it's going to be driven by debt. So you need to understand the conflicts of interest and what motivates people to do this clever, slick marketing that we see all the time. So be careful, be cautious. There are other ways to build wealth over the long term. It's not just superannuation, but it is regular investing over a long period of time, and we can all get there. Please remember, this is general advice only. Thank you for listening.